Welcome to Houston Home Talk, featuring all things real estate in the Houston area. We'll interview real estate professionals, local business owners, and special guests from right here in the Houston community. This is where you get the inside scoop about what's new in real estate, new community openings, and business openings, and much more. The Houston Home Talk Show starts right now.
All right, welcome, guys. This is James with Houston Home Talk, and I am joined today by my good friend Cindy West with NRL Mortgage. How you doing this morning, Cindy?
Hey, James. I'm great. How are you?
I'm doing great. It's a little chilly for us here in Houston at a blistering 70 degrees. No, just you know, people in the Midwest laugh at us when it gets to the 40s.
Yeah.
But it is cold for us. But I am glad to have you on. It has been an interesting ride as far as interest rates and a lot of things going on specifically this year. And you have been in the business for a few years now. You've done really well, and I appreciate all your insight. So for just to kind of set the table for everybody. So Cindy and I have known each other for about 3 years. We've been working together. You came to visit me when I worked for a home builder.
Mm-hmm.
And you were one of very few, really probably the only one virtually that really would come visit me, because everybody else was scared to come see me working for a home builder, because they just assumed that they could get no business from a home builder's on-site salesperson, which was not the case.
No.
And so I'm glad that you've been very tenacious in the way you work, and I admire your work ethic. I see you on Saturdays, Sundays. I see you everywhere. So you have got a lot of knowledge, and your work ethic has been very, very admirable. So what I want you to do is just kind of introduce yourself. You got a very interesting background.
Mm-hmm.
Introduce yourself to the audience, to kind of tell us a little bit about your background and how you got into the mortgage.
Okay, well, sure. Yeah. So I got in the business 3 years ago. Mm-hmm. And my background started with auditing and taxes. I did that for several years, and then I relocated to Los Angeles, and I became a forensic accountant, which is very interesting. So pretty much what I would do is I worked with people getting a divorce, determining child support, alimony, division of assets, and valuing businesses. Pretty much I would find the money and determine what an individual's cash flow was for child support and alimony. And then after that, then I relocated here with my family, and that's where I met Chad Freeman, and he is a manager for Nations Reliable Lending. He told me about the job, thought that my personality and my background was the perfect fit. And my daughter was just going into school, so I thought, it's a great time to get back into the workforce full time. So I took the test and passed it, and then just been on my way ever since.
So the forensic, you gotta give me peel this back a little bit more, because every time I hear forensic, I usually think, CSI, one of these criminal shows when I hear forensic. So break that down a little bit more as far as what you did with that forensic, as a forensic accounting.
Yeah, so pretty much, it has to do with documentation, looking at paperwork a little bit differently. And, people represent themselves, based on the tax return. Well, I only make $25,000 a year when you're living in a $500,000 house and you drive a Mercedes, and I could see all the charges on your credit card for limousines and things of that nature. So I would pretty much hunt down the money and figure out what the true cash flow is, because people, for businesses, they write off all their personal expenses, cell phones, cable bill, 100% of their auto. All those things are not true business expenses. Those are personal. So they, drain the company of, and they want the write-offs. They don't pay as much taxes, but from a divorce standpoint, that's not your true cash flow. So we add back all those personal expenses as perquisites to come up with somebody's true cash flow, and then that's how we figure out child support and alimony.
Okay, so I see then the connection with that and the connection to the mortgage side of the business, because a lot of what you were doing in that career really translates into you being a mortgage lender, because a lot of the details that come along with, especially specifically, you brought up self-employed, because those are the biggest challenges when it comes to the mortgage.
Yes.
So how does that background, how did that help you on the mortgage side? Because I guess I know it's only been 3 years, but you've been very, very successful in the time that you've been a mortgage lender. So how does that help you in being successful in what you're doing now?
Well, definitely the tax knowledge and the attention to detail and looking at paperwork a little bit differently. Very detail oriented, which in mortgage you have to be. You look at the paperwork up front before you get under contract and kind of figure everything out ahead of time, instead of having issues under contract that boy, I wish I would have seen this or looked at it closer then. But definitely the tax return and the tax knowledge has helped me with understanding the actual tax return for the self-employed borrower. So you can have a Schedule C, which is on your 1040, or you can have 1065, which is a partnership returns, S corporation, or your 1120, which is your C corp. So understanding how somebody gets paid out of each one of those is quite differently. So you can get paid out of distributions, you can get paid through salaries and wages, or dividends, depending on what tax return you're filing. So that's definitely given me an edge.
Yeah.
And put me on the fast track and dealing with more sophisticated buyers with more complex tax returns.
Sure.
And the attention to detail and looking at paperwork and just knowing I've seen all these documents before. I've been working with them for years, so it's definitely helped.
No, that definitely explains a lot to this.
Right.
Because I've had a brief stint as a mortgage lender as well, so I understand the level of details, and I don't think a lot of people understand it unless you've done it.
Yeah.
There's no way. And as a realtor, most realtors, all we care about is the loan approved?
Right.
And are we funded? I mean, those are the words we want to hear. Are we funded? Okay. But when you're behind the scenes, I mean, the level of detail, there's so many moving parts. And so I appreciate you guys more, because I've had a brief stint doing it and kind of understand now that there's so much that goes on behind the scenes.
Yeah.
And, someone like yourself with that background and being very detailed, it's so important. It really is. So now I know you guys have a program, because one of the things that I work a lot with sellers who have a home to sell before they purchase their next home. I do a lot of new construction, and so typically we have a contingency to where the only way they can purchase the new house is if they sell the current house in most cases. So I know you guys have a product that's kind of designed, and you don't have to go into a whole lot of detail, but I know that's something that I wanted you to share a little bit about, because I think it's important for people to know that you guys have that product. I've dealt with a lot of lenders. I don't know anyone that has a program like this. I might be wrong.
Yeah.
I don't know anybody that has this program. So tell a little bit about that. Bit about that program.
Well, it's a fantastic program, because people that are looking to buy, and I say new construction, it doesn't have to be new construction. It can be anything, but who this product would best serve is somebody that finds a house that they fall in love with, that they really want. It could be through a builder. They might find a lot, the perfect lot in a cul-de-sac or on a green belt with a backyard that, let's say, waterway, or anything specific that they might lose if they wait to sell their house.
Right.
So that's kind of the emotional side of this product, is somebody that's motivated to move forward and doesn't want to wait. And I think this product also is more beneficial to people in higher price points with significant equity. So pretty much, in order for this loan product to work, you have to have at least 30% equity in the departing residence, and you need 20% down payment to move forward on the purchase. Now, you can obtain gift funds for the 20%. However, you do have to have at least 5% of your own funds. So that would mean 25% now.
Okay.
But you can get the gift funds of 20. You bring 5%. The 30% equity, if you have your house paid off or have significant equity, meaning like 50% or more, and you don't have the cash in bank, you can do a cash out refi to pull out the 20% as long as you leave 30% equity in the departing resident. So you can pull out money to use that on the down payment for the purchase side.
Got it.
Yeah, you have to make sure the house is not listed for sale because that's a red flag in mortgage. So before you get a cash out. So it's a purchase just like any other purchase, but we are eliminating debt just from the ratio. So you actually will have 2 mortgage payments until the house is sold. The only stipulation is that that house has to be listed for sale prior to the purchase of the new residence.
Okay.
And so that's something where if you're building builder relationships, that's a good thing to have because the builder is going to identify that and is going to call you, if you're marketing this product, to list the house for sale. So that's the key, is as a realtor, you're getting the listing and hopefully the buy side as well, because you're going to get a walk-in client that falls in love, has a house to sell, and that builder is not going to want to wait 3 to 6 months for the house to sell, or probably does not want the contingency offer, because if it's in a higher price point, it might take a little bit longer, or if it's a flooded house that you have for sale, who knows how long that's going to take to sell.
Yeah.
So it's a great product that allows people to move forward without waiting for their house to sell. And then they don't lose equity. They don't have to drop the price. They just have to afford the 2 payments.
Right. And there's a lot of people that are in that position to be able to do it, especially, like I said, in that higher price point.
Mm-hmm.
This helps them not lose out, because I have seen it on several occasions where they probably could qualify for both financially, but this product, like I said, this product wasn't around. I have no knowledge of that product a few years ago. So
yeah,
it's a great option for people that are looking to, buy another home or build either one. I'll make sure I post your information, because there may be people out there that want to reach out to you and get a little. I know there's probably a little bit more detail, which you probably need to speak with somebody in person, speak to somebody over the phone to get a little bit more detail about their situation and how the product can help. But I know it's a great product and it can help a lot of people. So builders love it. I'm not competing with their mortgage company, their in-house lender. This is something to add on to their business to help it grow. I'm not looking to compete with them. I usually can't with their incentives. Right. Yeah.
But this can eliminate the contingency offer, and it's very attractive to builders. And I've gotten definitely lots of calls and emails from builders I've never even met before.
Yeah.
Clients. So again, it's a great marketing tool to get connected, to build a relationship, to help a builder build their business, and great for realtors to use that as well.
Well, I know a lot of builders. I work with a ton of them in the new construction, kind of what I specialize in more than anything, having worked for a few builders myself personally. So I will make sure they all know about this. And like I said, if anybody is working for builders that might be watching this, I'll make sure they get your contact information, because the on-site salespeople are about they don't get paid to do loans. They get paid to close homes. That's right. And having you as a resource in those situations is a great thing to have. I'm speaking from experience. So I know one of the big things and challenges that I've seen so far this year are the interest rates. So rates have slowly just crept up. And back in January, February, I was telling people that rates are going to increase.
Yes.
And unfortunately, they have. And we're now almost to the end of the year. And so I guess, what are we looking at? FHA, I know everything obviously based on credit scores, but what kind of averages are we saying on FHA conventional? And then what are we looking at? Maybe first part of 2019. Do you kind of think what may happen with rates come that first quarter?
Well, definitely rates have slowly increased. They're in the fives. So again, depends on your LTV, FICO score, debt to income ratio. I've seen fours, 0.875. Again, sometimes they come with a discount point.
Right.
I'm afraid of that. But rates are still great. I mean, they're still near historic low. It's still a great time to buy. Do not wait to buy a house. Don't think that the rates are going to go down. Right. Of course, I don't have a crystal ball.
Sure.
But my, good judgment indicates that I think they're going to probably stay or climb a little bit. The interest rates are tied to the 10-year Treasury.
Right.
And usually when the Fed announces the direction of interest rates, that they're going to do some hikes, the market has a tendency to accelerate that. So if they're going to say they're going to increase in December, the market goes higher before that. So it's stable. They're still near historic low, and they're in the fives. And I would not wait. A 1% increase in the interest rate will make a 13% increase in your monthly payment. So $1,000 monthly payment, your payment will go up to $130 or an extra $130 a month. So that's pretty significant. People always talk about their FICO score, and I want to increase it. But I tell them, I said, time you can increase your score, you're going to be offset by the higher rate. Right. So it's a wash. And
that could take somebody from qualifying to not qualifying. I mean, the bump in the rate. And for some people that might be borderline or maybe close anyway, and you wait, you're not really winning in a lot of cases. You're not winning by waiting. So I try to encourage people, if you find a home that you're interested in now, like, don't wait, because literally, I mean, a half a point or a point can make a significant difference. It can really be the difference between you qualifying or not in some cases.
Yeah, or you have to drop the purchase price, or have to come up with more money down to offset that. So for every $10,000 you put down in a house, your monthly payment will change by $50 a month. Right. So $20,000 will only make $100 a month difference in your monthly payment. So that's not a lot of movement with a significant $20,000 down payment. So you're better off to do it now, because rates in the fives are fantastic. And I know people, go back to the past in threes and fours and even twos I've seen. And ladies and gentlemen, that was history. You made history for a lifetime.
Yeah, so that ship has sailed.
Yes.
The ship has sailed, and if you weren't on it,
right.
It's funny when people start talking about the rates now, how they're going up. And I tell people, before the crash, I mean, interest rates were in the sixes.
Yes.
My parents, when they bought their houses, they were in double digits. So it's just perspective. But if you didn't own a home before 07, 08, and maybe you started looking into it, after 2008. So basically the last 10 years, you've been spoiled.
Yes, absolutely. Absolutely.
But it wasn't on purpose. They weren't spoiling us out of the kindness of their heart.
I know, right?
They were doing it to encourage people to go buy, because everything had kind of tanked, 08, 09. And so that's why those rates were so insanely low. It was to encourage people to go out and own.
Yeah.
And so, obviously as the economy starts to get better, it's just a matter of time before those rates start creeping back up. And that's where we are right now.
Yeah.
But I laugh when people start talking about, oh my goodness, my rate's 4.8. And it's
I know.
Why?
Right.
Rates are still very, very low. But historically speaking, if your history is only 6 years ago.
I know, right? Yeah.
It's a different perspective.
First house too that we bought was back in 2006, and it was 6%. And I remember like high-fiving in the kitchen and like hands, like woo, because everybody was paying 10 and 11%, and I got 6%. And And that was a great rate. So 6% is a great rate, and
It was.
is good. So.
It absolutely was. Yeah, it's. I find it funny when people start talking about it, but we can't control it. Home ownership is still a better way to go. And paying a 5% interest rate or half or whatever it is, and whatever it ends up being in 2019.
Yeah,
it's still a better option than renting in most cases. So, we'll continue to encourage people to go on. But yeah, I mean, the sooner the better, because rates, from what I see, and you can speak on, I mean, for what I see, it seems like it's gonna, the experts are saying that, 2019, of course, again, there's no crystal ball, but that, we're gonna maybe be in that consistently in the 5% range. Who knows for sure, but that's what I see and that's what I've read. So
definitely would agree with that. Yeah.
So the buying power for people changes significantly as those rates go up. But if you guys are looking at owning a home, call Cindy. And one more thing, Cindy, I want to ask you. So I want you to distinguish between pre-approval versus pre-qualification, because I get this question a lot. I know what the difference is, and there is a big difference. So I want you to speak on that a little bit so people really understand the difference. And when, as a realtor, if you're making an offer on one of my listing with the pre-qualification letter, I'm not feeling that comfortable about it, quite honestly.
Yeah.
So, speak on that a little bit and kind of tell the people what the differences are.
Okay, well, definitely pre-qualification and pre-approval. So an underwriter, there's a couple differences. The underwriter does the pre-approval. So that's when it actually goes into underwriting.
Yeah.
But there's levels of pre-qualification letters that have stronger, credibility than others. So, and that's pretty much the documentation.
Yes.
So when a consumer fills out a credit application, and we call them, we go over the 1003 with them, we pull their FICO score and import their liabilities into the application, make sure their debt-to-income ratio is right, make sure the LTV is right, run interest rate pricing, and make sure we get automated underwriting system approval, which is the automated scientific version of what an underwriter does. And so when we get an approved eligible, that triggers us to give a pre-qualification letter.
Right.
So on that letter, though, if we want to take it to, I always say, I want to upgrade your pre-qualification letter, just to upgrade it, which means I'm going to now look at your source documents.
Right.
So source documents are your tax returns, 2-year tax returns, 30-day pay stubs. And that's the critical part, because we really want to look at the tax returns to see what are you writing off. Are there, if you're a W-2 employee, did you write off 2106 expenses, which are unreimbursed business expenses? Because if so, we may, and I say may, have to charge that as a debt, because those are business expenses that you're claiming. Now, there are different programs where we may be able to skirt around that, like a W-2 only program. If you don't own any real estate, we might be able to eliminate that. But the point is that we need to look at the documentation. That will uncover potential issues and can give us a better direction of which way we want to take the financing.
Right.
So and it's pretty much, it's still a pre-qualification letter. It's just reviewing the documentation or not.
Yes.
If you're a realtor, that's one of the things that you should look at is the documentation.
Yes. Yeah, because I mean the pre-qualification, you spoke on that. You can go online and fill out some information and get a pre-qualification spit out.
Yes.
With no verification of anything, which is why I love the fact that you take it a step further.
Yeah.
And for all of us that are involved in the transaction, I mean, from realtor to lender, we want it to be strong. I mean, nobody wants to waste time going through, contracts and inspections and everything.
You can save so much money. Like, you can waste your inspection fee, your option fee, even lose your earnest money, appraisal. Yes. I mean, you're talking $2,000.
Yeah.
So I always, the realtors that I work with, I always train them, teach their clients in the beginning, because you're the front contact, is to prepare them what they need. And it's very easy: to your tax returns, to your W-2s, 30-day pay stubs, 2-month bank statements, and even the bank statements are pretty significant. And even ID. I mean, we've uncovered, we don't look at that in the beginning, and then things happen that's expired, and they don't have time to go get it renewed, or there's always something. And really, I always tell the borrower, because it is a lot of extra work, but there's no benefit to them, the consumer, if they don't provide that up front. Yep. And so, good realtors prepare their clients for that right in the beginning. And then, so when I come in and talk to them, they've already heard it from you, and now they're hearing it a second time. And again, I push for that. I don't, I can't make them do anything, but I tell them what's at risk if they don't get those documents. And they usually, I've never had a problem with anybody not complying with that.
Yeah, and I think just setting the expectation from my end before they ever really talk. And most of the time, not all the time, but most of the time, it's going to start with the agent.
Yeah.
It is so important to set that expectation. Yeah,
and you're really the point of contact. This is your lead.
Right.
Your relationship in some way. So either from a referral or somebody that's coming to you to buy a home, and I'm just the support behind the scenes. So you lay the groundwork. You're going to have more credibility because you know what you're doing, because this isn't your first rodeo. Yeah. And then when I get them, they've already heard it before. So it's really all about preparing them and making it easier for them. Because, the financing process can be, we ask for lots of documents throughout the process from start to finish. And consumers will always say, is this all you need? And I tell them, I'm like, well, this is all I need today.
Right.
And I'm like, I've got three people behind me that are going to look at your file in a completely different way than I do.
Yeah.
And the underwriter is going to ask for conditions that need to be cleared. My processor is going to ask for documentation, my production partner, and then we might ask you for the same document again because it might not be exactly what we need.
Yeah.
We could ask for documents up until, a week or less than a week before closing. So I think you can prepare your borrower for that. And if that doesn't happen, then it's even better. But
yeah, it's a plus.
Yeah.
Absolutely. Yeah. No, I try and set that expectation for all my clients that, it could go up to the day or the week before. Just prepare for it. So if it happens, then you knew it was a possibility. Yeah. And I think that just makes people feel so much better because, and it's not a difficult thing just to let people know.
Yeah.
Hey, this is not, there's a lot, it's not a straight, it might go like this.
Oh, yeah.
To close it.
Yeah.
It's not just a straight, there's a lot of things that happen, a lot of adjustments that get made, kind of like flying a plane. We never really feel it for the most part, but there's a million adjustments that these pilots are making when we're in a plane.
Oh, yeah.
Kind of my analogy when it comes to a mortgage loan, because it's the same thing. It starts off one way and eventually you'll get to your destination, which is closing.
Yeah.
But it's not always just a smooth process, and people so frustrated.
And I'm there along the way, every step of the way. I tell my borrowers, I'm like, you can call me after 5 and you can call me on the weekends. And, there's going to be a lot of stuff that is going to be thrown at you. And especially the first-time home buyers, I'm here to help you translate what somebody else is asking.
Yeah.
I might not be specifically asking you, but somebody else has requested that and they're uncertain. Well, that's part of my job. It's to be there is, the service support, which is mortgage lenders like myself, local small lenders. That's one of the benefits is the service and being available, and for the realtor as well to call and know that every time they call me, I answer the phone. You're not going to get my voicemail. You're going to get me.
Yes. And
you can ask the questions, and I'm going to give you the straight up answer, or I'm going to find out the answer if I don't know. Figure it out, because you're not left, on a ship that without a captain. So I'm there.
And I've had that happen. I know there's a lot of realtors. It's happened, lenders.
Yeah.
But I know, and working with you for the past 3 years, like you are true to your word. You do answer your phone, whether it's good or not. You're not the lender who just takes off, and which is amazing that it happens, but it does.
Well, bringing bad news to people is not easy. Nobody on the planet would like to do that, and especially the largest purchase of your life, and that would not be a good thing. And I try to stay clear of that, meaning I don't have bad situations. My people that I qualify, they're solid, and if they're not, which means there's some weaknesses in their credit profile, which there could be. I prepare them for that. I can say, this is the plan, and I give them the option. Your ratios are super high. You've got these collections that could be an issue. Here's what you risk. Your option money, your inspection fee, your appraisal fee. And I will tell them that if it's a weaker profile, and let them make the decision if I want to move forward or not. And I also tell my realtor that too, so that they can be prepared if I have to make that call and say, there's a hurdle that we just couldn't overcome. Right. Blindsided, like, well, why didn't you tell me this? Because, I haven't run into that yet, but I will, and I would. That's how I would approach it if it wasn't a paper lending. So. Yeah.
I mean, listen, there's a lot of stuff that happens. We just, again, we don't have control over with the transaction. There's so many people involved and so many things that happen. So it's just the nature of what we signed up for.
That's right.
It's business, but we love what we do. We all do, because it can be a crazy business. It really can. But you are really good at what you do, and so I will, like I said, all my builder partners that I know, if they are looking for a dependable lender, you are definitely in that.
Thank you.
Like, I'm speaking from personal experience, so this is not me. I've worked with you, and I've seen what you do. So how can people get a hold of you? Website, phone number, what's the best way? And then I'm gonna post your information as well. But go ahead and give what's the website and your phone number for people to reach out to you.
My phone number is the best way. 832-370-7373. That's the best way.
Okay.
Yeah.
Got it.
My phone, and then you can go from there. It's apply online. I got a direct portal website for online applications.
Right.
I get notification when it's started, application started, and I get notification when it's completed through email. And what I usually do is I call the borrower right away, introduce myself, and go over the 1003 with them.
Okay.
So my link to apply online is cindywest.nrlmortgage.com.
Okay. Say that one more time. So Cindy West, just one word.
Cindy West, one word, .nrlmortgage.com.
Got it. Okay, I'll make sure I post that on here so people can have that. And if someone's got some questions about that special program that you guys have, because there's probably a lot more detail that you can speak with on that, or just any loan. FHA conventional, Cindy does it all.
That's right.
She can help you guys, and she will get you to the finish line. I promise you. She's really good at it, and I appreciate your time, Cindy. We will do this again. We're about to get into the holiday season here in the next week or so, and so we'll make sure we do this again. We can sit here and talk for hours about this. There's so much to talk about.
There is.
But we'll do this again. I appreciate your time.
Okay, thanks.
We will do this again. Thank you so much, Cindy. You take care.
Thank you.
All right.
All right, bye.
Bye-bye.